One question I'm being asked right now is, will the stock market crash because of the election? Well, in this video, I'll help answer that question. Also talk about a snapshot of the market right now. Also talk about the history of stock market performances, especially during election years. Then I'll talk about what could happen, not what will happen, but what could happen if either Trump or Harris is elected. And then I'll talk about two things I'm paying attention to most. Before I dive in, if you're new to investing or want to get better at investing, you're in the right place. Here at Tykr, we're all about clear, confidence investing. All right, let's dive in. Here's a snapshot of the market. So good news, inflation is now at about 2.9%. Ideally, we want to be between 2 and 3%. The thanks or the credit really goes to Jerome Powell, the Fed chair, for increasing interest rates to drive down inflation. So we're between that 2 and 3% range. That's a target. For context, over the last year, we're hovering just above 3. Prior to that, in 2022, we got as high as 9%. So we have been moving in the right direction. Now we're exactly where we want to be. Ideally, we maybe even move closer to 2.5%. But anyway, 2.9 is pretty good. Then we get to the 30-year mortgage is now at 6.8%, which is down from 7.7% in October of 2023. So we are moving in the right direction. Ideally, we want to be between like 3 and 5%. If you can get a 30-year mortgage for that range in the US, that's pretty good. This is important because a lower interest rate allows more people to buy homes. And then for context, this year, I expected the S&P 500 to return about 15 to 20%. Right now, it's up about 17%. So we're way ahead of that trend. Now, to give you context on why I gave that estimate, let's go back to 2008. We had the recession. The market went down about 38% in 2008. And then in 2009, you get that slingshot effect. When the market recovers after recession, it's usually a pretty big year. Well, that was 24% in 2009. And then in 2010, it was at about 10%. So 2022, we had a recession, more than 2 consecutive quarters down, as that equates to a recession. So we're definitely that. And the market went down 19%. Then in 2023, the market went up 24% like it did in 2009. So then this year I was like, well, it probably will go up more than 10%. Can it go up 24%? Maybe, but I'm going to say somewhere between 15 and 20%. So again, we are ahead of trend. So things are looking pretty good this year so far. We'll see what kind of volatility we run into at the end of the year. Let me keep going. Let's talk about election years. So over the last 100 years, we've experienced 4 down election years. We'll go in reverse order. 2008, Barack Obama came into office. Market went down 38%. Was that caused by Barack Obama? The answer is no. That was caused by the housing market crash. Then we go back to 2000. That's when George W. Bush came into office. The market went down 9%. Was that caused by George W. Bush? The answer is no. That was caused by the dot-com bubble. Then we go back 60 years to 1940. Franklin D. Roosevelt. Market went down 9%. That was a transition year really between the Great Depression and World War II. World War II started in 1939 and ended in 1945. The Great Depression started in 1929 and really ended at the start of World War II. So there's a little overlap in that time period around 1940, a little volatility. So that's the reason why it went down there. And then in 1932, Franklin D. Roosevelt again, market went down about 8%. And was that caused by Franklin D. Roosevelt? The answer is no. That was the start of the Great Depression. So overall, presidents don't cause the market to go down. So you can have a little peace of mind on coming into the end of the year. I know some people are still freaking out, but let me continue. But in this case, we have a little perspective that, okay, so presidents coming to office don't crash the market. We'll see what happens. Let's transition to what could happen if either Trump or Harris is elected. Now, most of you already know this. Biden has backed out and Harris is stepping in as a front runner for the Democratic Party as of today's date. As of recording this video, it is July 23rd. She's a front runner, but she's not the definitive Democratic candidate. We'll see if that changes. It could change here soon, but I'm just going to record this video as if it's Trump versus Kamala Harris. All right, so what I'm about to talk about is not biased in any direction. I'm not going to tell you who to vote for. This is not going to be political. I'm just going to kind of lay out the data and what we could expect will happen. This is really looking at this through the lens as an investor. I know there's a lot of other things you may care about depending on who gets into office, but we're looking at this through the lens of an investor. Let's get into it. So this is an article from CNBC. They're not the only place that talked about this, and this is something that could happen, which is Trump wants to, apply the 60% tariffs on imports from China. Context here, back to September of 2018, he did the same thing with China. And over the next 6 months, the market went down 12% and tech stocks tanked severely. I remember a lot of my portfolio was way down. I was like, oh my gosh, this is killing me. So you get to March of 2019, that whole trade war deal ended and nothing changed. There are no changes to the tariffs, nothing at all. As people on Wall Street said, we pretty much kicked the can down the road 6 months. Well, here we are again. We can probably expect the same negotiations to happen. The market could go down because of these trade war tariff negotiations. So that's one thing to pay attention to if Trump gets in. Another thing, this is from CBS News, talked about tariffs. Yes, I touch on that. That's one. Number two is tax cuts, and three is deportation. So we'll skip tariffs because we touched on that. We'll talk about tax cuts. Now, going back to the early 80s when inflation was rising, one strategy that was attempted was to reduce taxes. That proved to not work. What that does do is it impacts some individuals, some high net individuals. It can put more money in their pockets. It also can put more money in the bank accounts of large corporations, but it doesn't really impact the overall economy. So we backtracked that strategy and then we went forward with increasing the interest rates. And again, Paul Volcker got a ton of heat for this. People hated it, but it worked. And we repeated that strategy in 2022 and 3. So with this, Trump wants to reduce taxes. And again, it's not going to make an impact in the overall economy. It's going to put more money in some individuals' pockets. It can be good for some, but not great for everybody. Now let's talk about deportation. So Forbes put out an article talking about how deporting 11 million people could cost about $265 billion. Who's going to pay for that? That's a lot of printing of money. Then you talk about the logistics per company. If you have people working at a company and you deport them, they don't leave, but you have to keep up your production, your manufacturing. Let's say it's manufacturing businesses. How do you keep that up? Well, you have to hire more people. That requires expenses on recruiting, expenses on training, and then probably higher wages and salaries. And what this can do overall is reduce the profit margins of these companies. And it won't be all, but it could be a lot of these businesses see a reduction in profit margins. And why is that something to pay attention to? Well, if you've been following Tykr long enough, we teach you guys how to pretty much read those income statements. You have the income statement, cash flow statement, and balance sheet. The number one most important line is that EPS, earnings per share, on that income statement, which is essentially net income divided by outstanding shares. Pretty much the profits. When you reduce the profits and you don't see an increase in profits, guess what? Share prices of stocks go down. So overall, if we deport a whole lot of people, profit margins of businesses could decrease, which means the businesses you and I invest in, they're not going to see an increase in share prices as fast as we'd like. Again, keep this in mind. This is something that could happen. All right, now let's talk about what could happen if Harris is elected. Now, it sounds like she's going to continue really in the same trajectory that Biden was. And one key thing they're pushing was to increase taxes, personal tax. This is from an article on GoBankingRates.com, talking about increasing personal taxes in the highest tax bracket from 37 to 39%. And then increasing corporate tax from 21 to 28%. Now, in the highest tax bracket, people are going to kick and scream and worry about that. At the end of the day, are they going to slow down their expenditures in their own personal life? The answer is probably not. So that's not going to make huge impact. What will, though, is, and I only know this from being in business long enough and working with a lot of public companies, is when you start increasing corporate tax, especially from 21 to 28%, guess what happens? Those businesses start spending less. Most of the commerce around the world is B2B, not B2C. B2B is the majority. And what that means is if businesses are slowing down their spending to other businesses, that means their revenue slows down, but what happens to their expenses? It probably remains the same situation here. Profit margins decrease, which impacts that line on that income statement, that EPS. If EPS is not increasing, our share prices aren't increasing. So either way, when we zoom out, depending on who gets elected, we could run into a situation where the market could slow down a little bit. Now, before I dive into the two things I'm paying attention to most, what I just talked about with depending on who gets in office can be good or bad news depending on where you're at. So within Tykr, you probably read an article or have heard me say this before, but you are in either wealth building mode or wealth protection mode. If you're in wealth building mode, you're still working. You could have a timeline to achieve financial independence or retirement. It could be 5 years, 10 years, 15 years out. In that case, you're working. You have an income. And we tell people when you're in wealth building mode, you want to keep some cash available. Ideally, you want to keep 50% of your cash in your broker waiting for a stockpiling event, waiting for the market to go down because it's a really good moment to have. It's the number one most important strategy we talk about. When the market goes down, you want to deploy that capital. Well, wealth building mode is great for that. So depending on who's elected, brace yourself, market will go down. That's your opportunity to deploy that capital. Watch those share prices go back up. That's when you make those really big returns. Now, if you're in wealth protection mode, that's when you're already at retirement or financial independence. In most cases, you don't have a lot of income coming in and you have your money in index funds, ETFs, or mutual funds, really just a bundle of stocks, sometimes stocks and bonds, but either way, you're going to have to kind of ride that roller coaster down. You may not have that capital set aside to deploy, so you're just going to have to ride it out, let the market go down, and just be patient and let it go back up. One thing to give you a little peace of mind here is over the last 100 years, there have been about 19 bear markets or recessions, and the average duration of each is about 9 months. So if the market does go down, just set expectations. It's probably not going to go down for long. Ride it out. Don't sell any ETFs, index funds, or mutual funds for a loss. Ride it out, let it go back up. But either way, depending on who gets in office, don't freak out from an investment standpoint. Just brace yourself. Wealth building mode, you could have a stockpiling event. Wealth protection mode, hold on to the roller coaster. We'll ride that down a little bit and then ride it back up. All right, here are the two things I'm paying attention to most, and this does not relate to the President of the United States or the United States in general. Number one is wars and rumors of wars. That keyword is rumors. So if there are other countries looking at entering the conflict in the Middle East, we've got a problem. Let me give you some context here. So in September of 2021, when Russia started talking about invading Ukraine, not the actual invasion, but started talking about, that was a rumor situation. The market does not like uncertainty, and that's when the market goes down. The market started to go down at that moment. Russia started talking about invading Ukraine. Now what happened was, it was February of 2022 is when Russia actually invaded and the market started to go up a little bit, but by that point, inflation started rising and the market really went into the recession. So we're past the point of no return. Now with what's happening in the Middle East, if another country, I'm looking at Russia, were to say we're going to invade, we've got a problem. We've got a global problem. Multiple problems can go on, but one big one is the stock market most definitely will go down at the moment. Market could go down, it could go down a lot. So that's number one. That's where I'm paying most attention. I usually listen to BBC News every day. I just listen to their podcast just to get a snapshot of what's going on in the world, and I'm waiting for any clues, signs of what's going on in the Middle East. All right, the second thing I'm focused on is something that not a lot of people are talking about, which is food shortages around the world. So check this out. This is from a site titled World Food Program USA. It's ufpusa.org. It has a lot. It's not news just about the US. It's really around the globe. So get this, about 10% of the world population, which is about 800 million people, are without food. People are that's a huge population going to bed hungry every night. About 1.3 billion tons of food are wasted per year, mostly first world countries. I'm looking at you, throwing away a lot of food. And then gets this, 3 million children die per year because of lack of food. That's mostly third world countries. In the US, we don't really experience that. We take food for granted. But anyway, let me continue here and we'll lead up to why food is important to pay attention to, especially when it comes to the stock market. All right. Before that, I'll talk about 6 causes of the food shortages right now. So we know there's a lot of food being thrown away, but let's talk about some of the other issues that are really causing this on the front. And number 1 is conflicts. I already talked about that. The conflict between Russia and Ukraine, it really caused 2 major issues. There are numerous, of course, we know that, but one was destroyed farmland, and number 2 is interrupted fertilizer production. You need a lot of fertilizer to make more food around the world. Well, what happened was you reduce the fertilizer production, crop growing slows, which means the shortage of food equates to higher food prices, which means conflicts start rising. This is a common trend. I'll talk more of that in a little bit, but conflicts are number 1 reason that can impact food supply around the world. Then we get to number 2, which is not enough capital. There are a lot of countries that don't have the capital to import food. A lot of third world, even some second world countries, they don't have that capital to import massive amounts of food, which causes people to starve. Number 3, there's not enough capital to farm in drier climates. There are ways where, farmers come together with scientists who come together with engineers and figure out ways, how do we grow more crops in drier climates? Well, in a lot of third world countries, you don't have the capital available to pay for those people. So that is an issue that impacts food shortages as well. Number 4, not enough capital to purify water. So desalination of salt water is extremely expensive. A lot of people cannot do it because it's outrageous. So what do? Well, you purify dirty water, or you try to get access to rivers and lakes and purify that water, which there are a lot of countries that don't have lakes all around or rivers all around. So it's a really tough spot to be, between a rock and a hard place, you could say. So that's number 4. Number 5, global warming is a thing. There are places such as El Salvador, Guatemala, Honduras, and Nicaragua, also known as the dry corridor. There, right now as we speak, 8 million people are impacted by a lack of food alone, just in that part of the world. I do know people in other parts of the world that are experiencing record highs. For example, I have friends that live in Bangladesh, and they reached record high. We're talking like record temperatures of like 42, 43 degrees Celsius, which is equal to like 108, 109 Fahrenheit, somewhere around there. It's ridiculous. When the climate gets so hot, it becomes harder to grow more crops. And that's not just happening in little pockets of the world. It's going to happen in more places than we think. And we get to number 6, which is an increase in pestilences and diseases. We know this is a thing. COVID happened, and get this, 150 million people were impacted by shortages of food. It disrupts farmers, it disrupts buying and selling and moving food around the globe. That's the main reason. So why is food something we need to pay attention to? Well, this is an article from CSIS, really talked about this, kind of hinted at this. I'll really spell it out. When food supplies decrease and conflicts increase, inflation increases, which means the stock market goes down. What this site really talked about, and I'll really hammer on it right now, which is when food supply increases, people are more apt to work together, conflicts decrease, inflation decreases, and the stock market goes up. So overall, I am really not focused on who's going to be president of the US. I'm focused on that conflict in the Middle East, and 2, it's really the big one, is food supply around the world. If we can keep each other fed, we are less likely to be confrontational. That, of course, keeps more people alive, and at the same time, it's better for the stock market. So to summarize this all up, please do your best to love your neighbor, be kind to each other, and if you can, try to cook a meal or deliver a meal to somebody who needs it most. I hope you found this video educational. Thanks for checking it out. I hope to see you in the next one. Bye for now.